Okay, let's begin. So for starters, we know that before doing anything on every pair that you look at, it is very essential that you identify or you map out your market structure first, in order for you to track the overall direction of the market on that particular pair that you are looking at. So in this instance, on the EURGBP, you can just begin from here. We've got this low, high, then we have this high low, we have this high, and then from there we can see that price did what? It took out this last higher low here. So this was our last higher low. So this is only the market structure. This was our last high low on the time frame that we have opened. This is our last high low. So let me just label this real quickly. So here's our low. And then we have a high here. This is our high low. And then this was our last high on the time frame that we have opened. Okay. So from that high, we can see that price did what? It broke below our last high low. So our last high low was violated, and then price created this new lower low. And so forth, kept on giving us these lower lows. They even took out this low. The last low the first low they had, they also took it out. Mind you, this is all coming from that high. Okay, it's coming from that high. So now, what we will look for here, we will be looking for a selling opportunity. Okay, so we've already mapped out our market structure. Okay, and then we can see that we are still bearish. Okay, or there are possibilities that price here, we might see price going down when it reaches this entire point. Okay, so let us continue spotting some more concepts that we have covered. So market structure, we have ticked the box. We have confirmed the direction of the market on the time frame that we have opened. Okay. So secondly, since we know, we've got what? We've got our reversal base. You will remember, guys, this is our rally. Base. And then we've got what? We've got a drop. So we've covered all these things. So this is our rally, our base. So I'll open up for questions once we finish the entire setup. And then we've got drop. Drop. So this is our complete reversal base spotted again. So even if you start your rally here, even if you said it started from here, You're still correct. You're still correct. And what I like here, we do have what? We do have a limping leg, or we do have this low being taken out. So all this happened where? It happened from that base up there. The decision to break here was taken from that base. So our selling opportunity, we will look for selling opportunity around that base. So we would have to refine that base and see if we have got even more components that will approve that base as the one to sell around. Okay, so we've got our rally base drop. Okay, that's number 2. Confirmed. So number 3, let's look if we do have any liquidity that has been created here, where they might try and trap some of the sellers and some of the buyers, of which we do have here. We also discussed this, the fake out. As you can see, we have these equal highs. We've got these equal highs right here. So what's happening here, as we discussed in the fake out session, what's happening here, we can see that price keeps on hitting this level. Okay, and according to the book, or the books that we find all over, it is believed that when the market is doing such, then that means that level is strong. Of which I also said that I think the opposite way when they say that, because I believe that the more the level is being hit, it's the weaker it gets. So as we can see, price has already visited this level 3 times. This was the 3rd time. So this is the first time here. Then they also created resistance number 2. And then just now they just gave us what? Resistance number 3. And I said you need to always question yourself, what is it that is above this type of level? When you pick up that price has been giving you these equal highs or equal lows. So you just got to question yourself, what is it that is below or above those equal highs or equal lows? Okay. So in this instance, we remember that we've got this base. So our main focus is on this base. And already they are giving us signs here. They are giving us signs here. They've already gave us 2 3 equal highs. 3 equal highs. And on the side here, we've got this support. So this will be the fake out V2. This is the fake out V2. So this is our fake out. There's our flip. Fake out V2. So the fake out V2 is created in price has given you something like this, where you've got these support levels and then they're being flipped, and then price comes back and keep on creating these resistant levels while you've got your point of interest above, or while you've got your base above. So we're still going to refine this base also. Okay. So this is another concept that we have already covered on our tutorials. Okay, moving right along. We also have what? A chart pattern, the QML. We also have our QML here. Where is our QML? Just to make things easier for those who are still not familiar with the QML. So this is our high. So our main focus on the left shoulder. Our high, then our low, then we've got our higher high, and then lastly we see the price giving us the bottom. Where is our left shoulder? This is our left shoulder. There is our left shoulder. There is our left shoulder. So this is the QML. So this is our low. This is our lower low. This is our higher high. So according to the QML concept, this is where you should have your entry. On the very same level with your left shoulder. This is where you should have your entry. This is where you should have your entry cell. Okay, so we have covered again what? Another concept, the chart pattern. We also discussed the chart patterns on some of our sessions previously. Okay, so now remember when we were doing our supply and demand basis, I said that you can identify like the entire base. However, it is very essential that you also refine your base to find like the sharpest entry or the low risk entry or around that base. Okay, so we even studied the candlesticks patterns or the bearish and bullish engulfings. We also discussed the different types that we have within those patterns. Okay, so within this space we need to find we need to find some of those candlestick patterns and then refine them. That's why we will have our final entry. Okay, so within this space, if you still remember, I will also pull out some of the screenshots where we were discussing these chart patterns. We have here the decision point type 2. There is our decision point type 2. This is the decision point type 2. This here. These two red candles that I've highlighted here. So, and then we said when you spot this type of candlestick patterns, this is where you normally have your entry on this lowest spike. As you can see, we have this wick here, and we have this shortest wick. So when you scale your entry, this is where you put your entry line, or this is where you'd prefer to have your what? To have your sell limits on this entry here, on this wick here. On this wick here, this is where you'd have your what? Your sell limits. Meaning now, not that we ignoring the shoulder or whatsoever. No. Whenever you have the QML, you need to make sure that you find a base around the QML. I think it works much better with a base on the side, because if you just find a shoulder by itself, like there's no base on the side, nothing else, usually that QML will hold and then eventually break. So I would advise that whenever you spot a QML, you need to find a base. You have to find a base on the right hand side. You need to find a base. So in this instance, this is our shoulder. This is our left shoulder. And then just around our shoulder, we have discovered what? We have discovered this chart pattern here. The partition offing type 2, or the decision point type 2. So let me just type BE type 2. So this is the partition offing type 2 that we have discovered just around our shoulder. As you can see now, our zone is getting even smaller, meaning now our risk is lower. Remember when we marked the base at first, we were here, like we covered the entire base, like this. But now, since we have refined our base and found our candlestick patterns, our candlestick pattern within the base, we have now this small zone, which will be our entry level. So now I think our setup is complete. Check here. Our setup is complete now. This is our PE type 2. So this will be our entry level. So nothing is hard here. As you can see, guys, I just used everything that I discussed with you in all the sessions like that we've held. We already covered these things, and I have applied them to come up with this complete setup. So this is a very complete setup now. It has all the components that you might need. And then when you're at this stage, the rest lies in the market. The fact that you have came up with everything like this, it means you applied everything that you have studied before. The rest is out of your hands. The rest will be out of your hands. So the only thing that you can do is to set your sell limits, your stops, and then you forget. That's it, nothing else. You just gotta sit on your hands. That's what they usually say. You sit on your hands. So this is our complete setup. And then I would prefer that your maximum like stop loss could be like 30 pips. Yeah, your maximum stops. You can scale up to 30 pips. Unless if you want to scale more, that's up to you. But 30 pips is what I prefer when having a stop loss, when setting a stop loss. So it is something like this now. This is what we're expecting. As you can see, all the components are being mapped out and labeled. And there's nothing new here. Nothing at all. Not even one. Not even one. Everything that I've covered, everything that I've mentioned here, it is something that we have already covered on our previous sessions. So if there's something that you are not clear with here, you can ask me questions. However, I will also refer you back to those videos, because they've got everything that you need to know. So you're just gonna put in your time and study more. So this is our complete setup on the EURGBP. This is what we can expect. I don't know if you guys have got any questions. Then you can take questions and then end our sessions and our session. I can see I only have Spamandla now in Amantli. Do you guys have any questions? Spamandla. Regarding the entire setup, okay, let me allow you to speak. Okay, I'm listening, bro.
Hello, can you hear me?
Sure,
Oh, all right. No, I just want to say something just about this setup is very clear and precise. In short, what I've seen here is something that I've already studied from the book and also from tutorials. So nothing new. So because we are very few, I just wanted to comment on that. It's very clear on my side. Thank you.
everything is clear on your side.
Yes, very clear.
Okay, thank you very much, Chief. Okay, so we can just end this session because I just wanted to share this setup and apply everything that we have already covered in the previous sessions. We check. So I think I've covered everything that we have already discussed in the previous sessions. So I just wanted to put it into action, like before everything happens, so that maybe some of the guys can see how is it applied. Like, where do you begin? Because I've been getting questions like, when doing a setup, what is it that you look at? So as we've seen here, we started with the market structure, and then we mapped out one of the supply and demand bases, and then number 3, we discovered the chart pattern, which was the QML. Number 4, we discovered the high liquidity area. We also discovered the trap zone, the fake out zone. We discovered that, and then lastly we refined our base and picked out some of the candlestick patterns that we discussed already before, and then the setup was complete. So this is just it, nothing else. These are the steps. These are the steps that you just follow to come up with a complete setup. So thank you very much, you guys, for your time, and I wish you guys a very good trading week. Thank you.